Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. Thanks for joining me again. We have Monday, we have 6 o'clock Central European time to do some cycle analysis on the financial markets. Thanks for joining me. We are live. I would welcome your questions as always, if you want to drop them into the chat section during the show. I have prepared 2 updates I want to discuss today. The first one is on gold. We are monitoring cycles in gold since May. I think I've updated 2 or 3 weeks ago, back in August. We see a follow through now with an important current situation. So let's have a look at gold market cycles. And finally, for sure, the US stock markets. The daily cycles are, as the whole year, are hard to analyze, but we will have a look at the weekly S&P 500, and I will also check the Apple as a proxy for the tech sector to see what the cycles in the Apple stock tell us and show us to derive some information on the tech sector. That's the 2 updates we will do today. So we are running 20-30 minutes, these 2 updates, 10-15 minutes. And then finally, for sure, as you like, let's take some questions. And yes, Daniel, stock market is getting tired. I'm tired since May, to be honest. I'm expecting the sell-off for late this summer, so it's due since May regarding cycles. But cycles is not everything. Google is another idea. If we have time, I will also add Google to the analysis. So let's start with gold, then S&P weekly, then Apple, and if time allows, we will also use Google as a checkpoint. Okay, that's it. Let's get into it. Starting with Google. Gold. Sorry for that. Gold. I would recommend, if you're interested in the rhythm of cycles in gold, check back the May video we did. And in the May session, we highlighted the top, which we see now here, back in, which happened in April. This is what we discussed in May, and we have expected this down move. And I highlighted on the 14th of August. So if we zoom in on the 14th of August, that's really at this point in time here. Yeah, I think a week before the real low happened, I showed you, please revisit the cycle analysis of the 14th of August. I've put down the link into the description, where I told you, based on the cyclic positioning and the status of the cyclic RSI, that a low is due during the next 1 or 2 weeks. And this was a perfect situation we gave you in advance, and this is exactly what happened to the gold price afterwards. So let's now discuss. By the way, I think here's the live screenshot from that session. 14th of August. This is where we have been. I showed you here that the cyclic RSI is crossing below, so we need to wait some days, and this was the cycle projection here. So that's just the session we did here in August, where we showed, or where I told you that's the position now that this downward trend should come to an end. But that's it. It happened. Yeah, that's the beauty of cycle analysis. And now let's update this cycle here. So this is the current view on, no, not on. This is the current view on gold cycles here. So we use a daily price information for gold. It's already prepared. I did it just before the show. I mean, for the new starters in cycle analysis, first always we have a look at the spectrum plot. At the bottom, you see 3 possible clear peaks here. This is the 100 days, and then a strong peak at around 200 days, and 321 days. These are the 3 important cyclic peaks we also saw back in May, August, and now in September. So that's always very promising if you see continuously the same cycles showing up, number one. And we observe now live that since May, prices seem to follow our projected cycles. These 2 informations make it very interesting to follow that asset and the current cycles here. So let's have a look at the current update. So I've just used the 200 days cycle in that example here, which is currently activated and shown on the screen. So it refers to this key peak here. That's the most prominent. That cycle was used on the show on the 14th August to explain that a possible cycle is due, which if we zoom in here was exactly what happened. We have a small upward move, but in relation to what the downward move was, this is quite an important up move here. So now we need to check if the cycles have changed. In regards to the 200-day cycle, no, it has not changed. It was a perfect cross below the lower band, as seen on the cyclic swing. So we have confirmation from the cyclic swing now, which has enough room to the upside to follow through, and the cycle also shows us a follow through here. I have also shown on the chart the future line of demarcation, which is the green line here. This line, as the concept of FLD, is shifted half of the length, so 100 days on average. You could also use 103 days into the future. That's the green price information. What we now need to confirm that this upward cycle is in force, it always happens late. So that's the by design with the FLD. We need now to look out for the price crossing from below above this green FLD. Then we have a confirmation or another confirmation that the upswing of this cycle is in place. This happens normally once half of the cycle has been passed. So by design, this confirmation only comes in once half of that cyclic leg has already been happened. So the confirmation by the FLD is always late to the show. But if we see it's even more stronger signal that the second half of this leg could be in. But it's not confirmed yet. So, but this is what I would recommend to look out if you now monitor price. The price level is somewhere around 1,980. So that's the level we need to reach to get a confirmation for the final leg of this 200 days upward cycle. So that's okay. But now I will show you the larger cycle here from that spectrum, which is if you monitor them individually in conflict with that cycle. So if we use the composite, and this is also what I used in August, all fine. We are now in this bottoming area if you combine the 320 and the 200-day cycle. So both, if we trust both, still fine. If we just look at this longer 320-day cycle, we need to check out or see that this longer term cycle is, since both cycles turned down. So that's the where we had the cyclic alignment back in May. The 200-day cycle and the 300-day cycle come into alignment into a top. So if I deactivate the 320 and activate the 220, you see that was the point where both cycles moved down, and the 320-day cycle is still in a downward phase, and we don't know which cycle is stronger, and therefore we need to add our additional confirmation. So I will now add also the FLD or adjust the FLD to 160 so that we use half of that cycling. And now if you watch closely what we see on the chart, we are at a very, very interesting point in time, right now, right today, yeah, at this given point here. So from the cyclic RSI, just using the technical information, it's useless. So the indicator is in between, so no clue from the indicator, just checking back this cycle. But the 320 days downward cycle has not been confirmed yet by the FLD. So, but we are now exactly at that FLD line. So we have now two options we really need to monitor very, very closely. Price action. So if gold now breaks down the FLD, so from the upper part to the lower part, this is a confirmation that this downward cycle really is in play and that the second half of this downward leg could follow. So then this 320-day cycle would become a stronger downward force in the markets here. So the second possibility, and this also happens at once we reach the FLD price target, this also could act as a strong resistance. So we push back from the FLD, which then would negate the strong 320 days downward cycle and would confirm the stronger 207 days upward cycle, which is in play. Yeah. So this is what I think during the next 1 or 2 weeks, we will know where we are and which of these cycles is more important than the other. So just stacking up both, it confirms a possible at least interim low in a continuous upward trend. If we now push back from the FLD price to the upside, it gives us confirmation that the 200-day cycle seems to be stronger and the 320-day cycle is not confirmed by Hurst FLD concept. If we follow through the downward move, then the 320-day cycle is confirmed by the concept of FLDs, and then we need to be careful if we still are looking for further upward movement. So then I would be neutral because then we have two conflicting cycles. But that's a summary. And you know, cycles don't always give just one clear picture. But if you add the different approaches we have at hand, yeah, cyclic RSI, FLD, dominant cycles, and cycle forecast, this gives you then the possible directions and what you need to look for on the price chart to rule out option 1 or option 2. I hope I gave you a clear guidance on at least what I'm monitoring regarding gold and cycles. At least it worked well since May. So we are in good shape with the upward turn now. And the next 2 weeks will tell us if we get a follow-up confirmation or a conflicting signal, and then we need to be careful. All right. That's it on gold. Let's move now to some stocks and the US stock markets. And yeah, I wanted to start with the S&P 500 weekly. So this is a weekly. Let's start with a weekly long-term view. I have closely checked the daily cycles on the S&P 500, but to be honest, I don't get any clue out of the daily cycles, just looking at the larger S&P 500. So lots of shorter-term cycles, similar amplitude, no clear takeaway. So for me, it's really hard to judge from the short-term perspective looking at the cyclic picture. Therefore, let's step up, use the longer-term picture, which is the weekly, which I have here. And I mean, clear, if you have a look at the price chart and the cyclic spectrum, there is a clear view that the 180-week cycle seems to be important. By the way, if you follow the overall long-term analysis I did even 2 or 3 years ago, which gave us the top. And that's also the reasoning. I mean, let's cross-check the chart here. So why cycles and price in general, this is what I highlight here since April, are out of sync, because I expected a follow through to the downside, which you see here into the summer period, even late summer. But I mean, we know prices moved up and up and up and never stopped. Maybe in September, but that's to be seen. So, and that's also at least for me, that's the clue in the daily cycles. We don't get any clue, just conflicting cycles. So we can't derive any forecast from daily cycles. But where are we if the 180 weeks, which we see in the spectrum here, which is shown on top here at the table, which I have activated now also on the chart. If that's still the most dominant cycle from the analysis, what is the reading from looking at the chart? So let's pay some attention here. First of all, it's not by surprise, but the upward move is not yet confirmed just looking at the FLD. I've also activated the FLD using half of that cycle length. So 90 is just added here for the FLD, which is the green line. And we are still below that line. So no confirmation that the upward swing is in force. I mean, no surprise as we are just at the low point here. But, and this is what makes me thinking all the longer period, is that we had a great confirmation. I mean, look here. Look at from timing wise, at the midpoint of that cycle, where price broke below that FLD from the upper to the downside. At this point in time here, so in September 2022, we had a perfect support and confirmation that this downward swing here is in place. And not only that, I mean, if you understand the concept of FLDs, it on the one hand side, it explains to you that you could expect then the second half of that leg now to start time-wise. And you can also calculate the downward target, which is then the same movement from top to that position. You would expect also then the follow through to the downside. And since then, we more or less stayed below the FLD, but price did exactly the opposite. So exactly as we reached that point, we crossed below, which is from just looking at the FLD concept, is a perfect confirmation of that time cycle we detected by also the spectrum. Price just decided the opposite and went more or less up since then. So this is the non-explainable cyclic situation we are in since February, March, April. That's why it's really not easy to derive at that point. But what I wanted to say here from a longer term picture, as I said, even as we arrived here at that bottoming point, we still cannot rule out. So I think we are now at the decision point. If you look closely where we are now at the decision point, and the decision point here is latest beginning of October, through maybe the next 2 weeks. Either we cross now to the upside, this FLD, which then brings us to a confirmation of this upward swing and the upward FLD concept. So then, and we are at the bottom of the cyclic RSI. So either we get a confirmation that we are in an upswing, long-term perspective, upswing cycle, no short-term rules can be derived from that upswing cycle, but then we would expect really a follow-up uptrend into maybe even 2024. So that's then the long-term projection, which would kick in, or within the next 2 weeks, or we will see a strong confirmation of a downward So of the downward move here, so that we will not cross above this, which will then give us this, I don't know, this late summer low somewhere here, because the FLD acts as a strong line of resistance here, and that the bottom was not in place. I think the beauty at the end is that during the next 2 weeks, it will be ruled out which way is now confirmed and not confirmed. So I'm sorry not to give you one clear guideline, but as said, I think it's an interesting point in time for the next 2 weeks, once in gold. Also here on the long-term perspective, if we get a long-term confirmation for an upward follow-through, or if we see now a quick reversal or continuation, what we see here since, or what we saw already since, I think, when was the top in here? Since July, so that we will have a strong downward movement as the bottom of this cycle is shifted to the right and is not in place. That's the long-term perspective. Looking at the weekly S&P. Now, and as I said, on the daily, I've not really seen any clues. So let's totally skip that. That's a waste of time just monitoring me on the daily S&P cycles. But I often like, as a proxy for the tech sector, to validate Apple, because a lot of volume, a lot of market capitalization is bundled in Apple, a lot of movement, a lot of transactions. Apple looks like to be a valid proxy for an analysis here for the tech industry. And therefore, let's check the cycles always also on Apple. And there's a much clearer view just checking daily Apple cycles. And therefore, I'm just deciding, yeah, let's do this one here. I will not go through the full history of analyzing Apple here and on that perspective. And that's similar, by the way, if you look at the spectrum here down below, a lot of smaller cycles, yeah, up to 200 days. So a lot of peaks here in that area, and then 1, 2, 3, 4. Not really easy to decide which one to pick. But then, even it's not perfect, but we clearly see as it is really going down to zero here. And here we have one long-term cycle on the daily chart, which is somehow there. And is dominant here, so it has 345 trading days. Yeah, so that's the most prominent from the spectrum, not to be seen on the S&P daily. You can compare that on your own. You will see that there is some longer cycle on the S&P 500 also there, but we cannot derive the length if we look at the S&P 500 daily. But if we look closer at the Apple stock market here, stock index, we can derive the length of this longer term cycle. And that's interesting just for me to pick this, to check that cycle. So 345 trading days used here as an overlay to that Apple section. I will leave it up to you to do an historical check how valid this cycle is. Just looking now at the current chart shows us we had a confirmation on the July top. So that's one interesting situation. So this confirms that we need to see a late summer low, or that there could be a downward lag to be expected from this point in time. We started this small downward movement here, but it's just a start. So this cycle just suggests that we would see a follow through into maybe the end of the year. And from the cyclic RSI, we have here and by the way, that's perfect picture here. So if you cross-check from the start of 2023, and there's sometimes I love the beauty of that indicator. Yeah, it confirmed the bottom here, which just one push to the upward here. Then we moved up above the upper band, but never crossed below. And here, boom, the first time we crossed below the upper band. So one buy signal, January 2023, which I also saw and used as to go long the market here, but I think I exited here somewhere in February, March, because expecting then this top somewhere. Then the follow through, and at least we now have confirmation in August, so 4 months later than expected, and could be, don't know, just pure cycle analysis what we're doing here. I'm not a market expert. I'm not doing any risk management. I'm not ruling out any economic situation for Apple, the earnings outlook, nothing. Pure cycle analysis what we're doing here. I always need to recommend that. You need to take much more information into account. But we are using cycles here, which gives us a confirmation of a top and then a follow through to the downside, looking at the technical indication, the dominant daily cycle, which would then favor the bearish case again for a downward move for, we have late summer, so it's due date, but I told you also on the weekly. So in the next 2 weeks, if we see a strong downward push here, then we still could find another bottom here in the markets, and we don't have confirmation that the upward swing from a longer term cycle has started yet. So this could act as a resistant. This is at least also seen in the daily Apple, which gives us a kind of confirmation for that. We could add now also to bring all methods in at the FLD view here, but then we need to have this 100 60, 70, let's use 170. So as expected, there is, we don't really see the confirmation would only be there once we cross below that green line, which we didn't have. So, we had a follow through here. What is nice on, maybe if we want to have a more, but that's more for the learning because it happened in the past. I think here it's also interesting, this cycle here, we broke above it, and here the last time we broke above this section here at that point in time, which gave us a price projection at that point in time here. I think here's the around 200 once we crossed that, and I think we reached 196 in Apple, so very close to that target. So in that case, we stayed above. We had the final confirmation about that this upward leg is in force. So at that point in time here, we have even been aware that only half of that upward movement has now been finished. So also timing-wise, we would expect that the same duration from the low to that point here, we now need to wait the same duration until the final top is in place. That was the confirmation we have seen here at that point. So we had a timing confirmation from the FLD for that point, and also the price confirmation, which was given here by this cross, then to the upside around 200, which is exactly then this movement here, which was then just stacked up, and I think we reached more or less closely to that point here. So at that point in time, we had a perfect confirmation based on cycles, but and here on the cross of the RSI then, which took place here. So we crossed above the band here. We know we need to wait some more longer, and at that point in time, as expected, cyclic RSI crossed down, set in indication, and here timing was. So, but that's the past. I know we can't make use of that. It's just a confirmation that the cyclic is worth following. So also from the cyclic RSI, there's a lot of room to continue the downward movement in the Apple stock index. And I explained to you before what to look out from a longer term perspective. So this could give us also already a shorter term introduction for the short term movement. So that's it on Apple. But you had the recommendation just at the beginning. Let's also use Google. Please push in the ID we need to follow up. Wait, give me a second here. Where am I here now? So give me a second. I need to look that up for you. So let's do the same on Google. Let's open a new chart, a clean chart here. So Google Daily, that's the, okay, here we have it. It's not split adjusted yet. Okay, so Google is missing the split is not in our data set here. So makes no sense. We need to adjust the raw data up front, which will I do just after that session, but this will not allow us to make this live analysis now. Sorry for that, but I will follow up with that next week. So that's it. I'm just looking at the time, 30 minutes. I hope you are aware of what we need to monitor now in the markets regarding gold, long-term S&P 500, and the short-term view on Apple. So let me cross-check your live chat discussions, and now feel free to drop in your questions, and then I can check back maybe what are the important questions. And Elliot, just by the way, as you recommended to have a closer look at Google, I would now use Google and see if we find the same cycles as in Apple. If yes, this is even a stronger confirmation of the cycle I've just shown here. If not, it is just a confirmation that daily cycles are useless at the current point in time since April, May. So that's what I'm looking for. Okay, so let's put in some comments here. So at least this would support the bearish case. So that the sell-off, which has started in July, needs to be strong. We've seen the weekly resistance on the weekly long-term 180-week cycle, which would indicate if it will not confirm the upward swing, which is in phase, then now it's time now. We need to see a sell-off. And yes, it needs to be sharp because you've seen the FLD here. But so his analysis, I don't know where this is based off, at least would be in alignment with the current cyclic situation. That's also a good point. If we switch from the cash to the futures, we have some gaps there. So I cannot confirm on the analysis, but what I like, Daniel, on your point is that you're exactly now doing what I would always recommend. Now you need to add your technical knowledge of analyzing price movements if there are gaps which need to be filled, which is a completely different approach than cycles, which give you either confirmation or disconfirmation. So in that case, I think the comment you mentioned here also then underpins what we've seen in the Apple stock, that there is still negative energy from the cycles coming into the market. Okay. Yeah, that's always then the interesting part of that discussion. So Daniel, you comment on the topic that cycles failed at least since March, and not to get us wrong, cycles really helped us to nail the downward move which started end of 2021 perfectly, almost perfect during the year of 2022. Then the expected upswing in January, perfectly projected by cycles, just since February, March, off. Don't know why. If that's the reason, maybe there's some engineering in the market since March, April. which is just a short-term or interim invention into the markets. Therefore, cycles are unable to see it. It's just noise. But I don't know. From a cyclic perspective, we don't know. Maybe it's not a. It's something which at least shows that cycles are not in. Yeah, thanks for posting all the gaps in the futures. I would recommend everyone who's interested in that analysis check the live chat. Elliot, yeah, I think, yeah, maybe we use the gold futures. Let me cross-check quickly. No, we also use the spot price, but I use the same here, so shouldn't be a difference in regards to cycles, but also between the gold futures and here that the index we used. And yes, as I think today I outlined for gold and the long-term S&P that we should also follow up here on the channels. And for sure, I will promise, maybe not next week, but in 2 or 3 weeks, we have the results on, and I will get back to the video from today to cross-check this. Okay. Yeah, I'm just. That's maybe thanks for commenting out Peter Eliades, a friend of the foundation. We had him here. That's a really interesting discussion. I need to get back with him. I know he was also looking for a more sell down, I think in February, March, April. So the fake breakdown, he also had hard times based on his concept he was using on cycle analysis. But then I will reach out to Peter and ask him if he would like this situation here with me together on the Cyclic TV. I think we can learn from that, and I'm also interested what his view would be, what we have seen in February, March, why we had this fake breakdown from cyclic perspective, and what is his current view. I will reach out to him. Ja, German, Deutscher Aktienindex, DAX, German or European stock markets here. If there is a high interest in looking, I mean, German DAX index is a very then related from a global perspective. It's just one part of the European indices. There are more than just the German. But if there's interest in specifically having a look at the German DAX, please get some commitment maybe from colleagues in the discussion below that video. And if I see more and more questions related to Germany, I'm happy to do so in one of the next. Yeah, do it today, time-wise. Me, or am I? And not today. So, but I mean, on my own interest. Let's do it the next time. Okay, I see you have also a follow-up. Yeah, thanks for all your comments out there. So your comments you sent me, we have the US election, which maybe also will influence sentiment, and there's an election cycle you can analysis. I have seen your comment on that, Thomas. Thank you for that, sharing that idea. Thanks for pointing out the seasonality here in the chat discussion, which is also a cyclic movement we have. So I really like the discussion you're taking here. And Florian, you point out the financial stress index and the banking sector. So you are right. So I really need to note down. I need to follow up with Google next week. I'm really making some notes here now. You wanted to see the German DAX, so let's have a look at the European indices and specifically the DAX, I promise, next time. and you want to see the financial stress, which I also want to see. So let's recap the financial stress index, which is a kind of sentiment measure and sentiment cycle. So I think we have our agenda for next week. Google, we can monitor the situation by that, which we need to do anyhow. I will bring in the German Deutsche Aktienindex cycle analysis, and we will check out the financial stress index next week. So I have noted that down. Thanks for your comments. If you're here live, you get the benefit of either asking or helping me out what you want to see next. That's it for today. Thanks for being with me here. I hope you had an interesting situation. I need to go and reach out to Peter Elides. So, yeah. So, 4 topics on my to-do list. Maybe you have found some ideas on your cycle analysis. Thanks for today. Have a nice week. Hope to see you back next week. Same time, same place, cycle analysis.